So this is, I'll repeat it on the recording, it's likely going to be a shorter one just because there isn't a whole lot to review. With Christmas this week, you can see we haven't really done a whole lot in terms of the market. We have recovered from that pretty massive fall last Wednesday. But besides that, at least on oil and gold, nothing really here. We could talk about oil because oil, we were talking about having those lows ran out, right? I think that's what we were talking about Friday, or not Friday, but last Wednesday. Those got ran out. We do have a candle 2 closure there. Just what I don't like about here, and we'll go in and talk about this, is if we're going to drop down to the hourly time frame here, and we mark out our change in the state of delivery and our setup here, right? This is also, I saw Garrett talking about this, so we will also go over it. So this is a pretty clean setup when we first see it, right? We have a reach into, sweeping out those equal lows, right? And it's all based off the daily, right? So we're reaching into that fair value gap, sweeping off the equal lows. We have a change in the state of delivery. We're closing back inside. So we have met all the flowchart, right? We have a point of interest. We have a swing formation or a candle 2 closure. We have a lower time frame change in the state of delivery confirming that, right? So going into this next day, if we're bullish, we'd want to see what? An open, low, high, close, right? And so just off the open, what do I see? I see a low right here, as well as a fair value gap. So if I was going to get on the side with this, I would anticipate price to open, reach into, at least sweeping out this low, ideally into this fair value gap, have an intra-candle change in the state of delivery, right? So if we mark this out, reach lower, we have that intra-candle change in the state of delivery, and then we can continue higher for the duration of this candle to these previous day's highs up here, which are marked out. Now, what do we notice about this? If we let this continue, we open, we trade higher first, right? So that's not normally what we want to see if we're going to have an open, low, high close or a bullish candle. We open, we go make a high, right? And then we start to trade lower, right? So this is not bullish to me anymore because we swept the previous day high. We then formed a change in the state of delivery, bearish here, right? So this is now opposing my anticipated bias, right? And so as we go, and when we close under here, that's where I'm just not interested. Or what does this mean? It means that I'm not anticipating this candle to expand. It doesn't mean that this idea is completely invalidated. I just don't expect expansion during this candle. Now, once we start to trade lower like this, my eyes are just drawn to these lows, expecting these to get invalidated. However, when we have a nice V-shaped recovery, we start to recover. Now, this is what I want to talk about here. If this idea is going to remain valid, there's no reason to be looking for it within this given time period. The reason for that is if we're not going to expand in this candle, if this isn't going to be an expansion candle, it's generally going to wait for the next candle. So I'm better off to let this candle form. We will just do something real quick. Right? And then if we get a decent closure, I then expect this wick to form or to hold, right? You can see this one does a little better to form an open low. And then we are trading to those highs, right? So, and that's where we're at now, as we have hit those highs or hit the first high. Now we're forming a reversal. But any questions on that? I just wanted to review that because I watched it on that Monday, and if it would have formed better, it'd be something I'd consider. But I think it's important to know if you're bullish, you want to see open low, high close. If you're bearish, you want to see open high, low close, right? So how it forms that daily candle is very important. So let me see if there's any questions on that. OPEX, quarterly options expiring. I was listening to a YouTuber says there's going to be volatility this Friday with Bitcoin quarterly options expiring, 20 billions expiring. I'm not too well versed with Bitcoin quarterly options or just that in general. Um, However, with options expirations, there can be some volatility and movement as, you know, people move their positions and stocks around to get on side, um, or, neutral on their positions. Um, so not really sure how that will impact. Not super interested. I do have some positions that would be affected by that, but that's stocks and options, and they are also options expiring Friday. So 1 second, plugging my computer in. Um, could you stream some backtesting in future streams? Yeah, that is the plan. Right now I'm a little disoriented from moving in and then just a bunch of stuff going on. Like I'm still streaming from kitchen counter right now. So I don't even have my PC set up. But once I get more situated, I'm planning on doing more streams, more things. Aim and I have been talking about a few things. um, does Thursday 19th C3 closure, does it not close C2 high but C4 expanded? Okay, gold daily Thursday the September. Okay, we got to go back a little ways. Let's go daily. Hop into here, Thursday the September 19th. Right here. I'm pretty sure if you go back into my analysis channel, I'm pretty sure I talked about this day. But actually, I know I made a video on this. Actually, I talked about the phases of price delivery here. So if you go back to my analysis section, I talked about this exact move. But in terms of the phases of price, right, we have a consolidation. Let's talk about it this way. We sweep out the low in a consolidation, right? So now we're expecting us to, if we form a reversal here, which we do, see the other side of the consolidation, right? And we get that move. Now we take a look at this candle here. Is this forming a reversal off of this consolidation to trade back lower? No. It's closing nice and strong outside of this range. So I'm expecting this to continue, right? Now we have expansion. If we're going to enter a new phase of price delivery, I'm thinking either retracement, reversal, or consolidation, right? So when I see this closure here, I'm thinking, okay, we have a candle 2 closure. I'm thinking either retracement or reversal, right? Now here, when we see a closure below here the next day, I'm thinking this is continued to have a retracement or a reversal. And then this was, I think, CPI, which was a little weird. It took out the lows and the highs. But, right, if we're focusing on the bodies, don't focus on this wick here. We see expansion, retracement, right? I'm seeing this as a retracement into this fair value gap or into this previous high, basically, right? I don't need to know that here, right? I don't need to know right here, right? We've swept out this high, we've pushed lower. I don't know which way this is going to go, right? I don't have to know that, right? I just wait for more data, right? Because we have Monday, Tuesday, Wednesday. We still have another day before Friday. So I let one day form. And what does this tell me? Well, we are closing over a series of down close candles into a point of interest, which would be this fair value gap, right? So then I'm anticipating with Monday, Tuesday, Wednesday, we're declining lower into a point of interest. Wednesday forms the low. Thursday then confirms this low. This is also the ideal formation because this candle 3 closure is also validating this low, right? Hopefully that makes sense. So then I can anticipate Friday to do what? Expand higher through this high, right? And then you'd want it to see it finish in the high. Because if we're thinking about the weekly candle, right, we're expecting it to return to its opening price, which it already has, but I'd want to see it continue through this high. And then that's where we get that expansion, which this was a little more than I was actually anticipating that day. But does that make sense? MK? Where's the analysis section? Let me link it to you. That will be TT analysis. And make sure, if you guys haven't already, let me show you this. If you go up to here on Discord on the top left and you go to channels and roles, make sure to click onto that, and then make sure that when you go to browse channels, make sure that you have all of the market lens sections turned on, right? So that you're not missing anything. But does that make sense on terms on that analysis? I can go real quick. I'm gonna just go into my gold analysis from that day. I'm pretty sure that was when I'm settled into a spot, I make video analysis, which is a lot better. Yeah. So right here, I'll just show you guys the analysis. Remember how I was saying I don't have to know what's happening right here. Then this day, the 19th, new phase of price delivery. Reference the previous video, letting today pass. So I let this day pass. And then if we go back, right? Let me actually hop into that video real quick so you can see what I mark up. Over this. So if you go to the minute like 1 mark in that video, you'll see that I'm marking out that, right? So I'll share the link to that message for you guys who want to go revisit that. Yep, you were back testing. Yeah, good stuff. All right, let me read a few more questions here if I miss anything. Could you touch on risk management for personal and funded accounts? Yeah, so personally for me, with my personal account, I just risk the same amount per trade. And what that does for me is, I think it's more psychological than anything. But let's say, let's do a quick example. Let's say we'll just use $100 and $200 as our risk. So let's see, minus 100. Okay, and then we'll go plus 200. So let's say we have a system that is 2R, right? So minus 1R is minus 100, plus 2R is plus 200, right? So normally, right, I know I need a 34% win rate to be profitable with this system, because let's say I have 1 loss, right? And then 1 win, and then another loss, right? So I've had 2 losses, 1 win, and if you add those up, I'm at break even, right? So 1% more of a winner will make me profitable. Now, let's say this, right? So in my mind, I can't predict, or I don't know if my next trade is going to be a winner or a loser. If I knew that for a fact, why wouldn't I risk 100%, right? If I knew for a fact my next trade was going to be a winner, why wouldn't I risk my entire account, right? But I never know that. So if I take a loss, the reason I don't adjust my risk is because I don't know if my next trade is going to be a winner or a loser. Sure, if I change my risk to half of this, then yes, if I have another loser, it will decrease that, right? So let's see it this way, right? So what I do is I keep my risk the same. So if I have another loser, I'm down 200. If I have a winner, well, then I would be up 100, right? Now, other people will say, okay, after 1 loss, I'm going to decrease my risk. So this can go 2 ways, right? Let's say I have another loss. That loss is then going to be lessened, right? Now I will only be at minus 150. But if I have a winner and I already, like I lowered my risk and then have a winner, now I'm at plus 100, right? So if I don't know that my next trade is going to be a winner or a loser, right? This is break even, right? At a 50% win rate. So let's say every single time I lose a trade, I decrease my risk, and then I win a trade and I remove it, bring it back, right? I could have a 50% win rate, and instead of being profitable, I could be break even, right? So yes, it can limit my downside, but I prefer to just be more selective with my trades and risk the same amount for every trade, because psychologically, there's less moving parts. So I just know that I need to win 34% of trades. I don't need to be like, oh, I won 60% of trades, but I adjust my risk so many times that it offset it, right? So that's how I manage risk, and that's how I do it. Other people do it differently, suits their personality. This is just what makes sense to me because I find it the most simple. I don't have to think about, oh, I've taken 2 losses, so now I'm only risking, I'm cut it in half again. I'm at 25 now, and it's like, okay, well, I had 2 losses and then a winner, right? Or 3 losses and then a winner, right? So let's do it. From my standpoint, if I had 3 losses, wrong button. If I have 3 losses and then a winner, I'm down $100 here, right? Because those cancels out. If I have 3 losses in a row and then a winner here, right? Now, if I'm having my risk each time, now I'm only up 25 there. Those cancel. I'm still down 150, right? So that's just how I do it. I know there are certain scenarios, having a risk in the same day. Sure. I just do this. So hopefully that helps, or if you have questions on that. Is there a formula to find that amount? I have some Excel sheets that you can use, but really it's just the math is let's say I'm risking $100, right? What is my stop loss size, right, in points? So we'll go to ES for this example. Make it pretty easy. We'll use MES since we are in 100. If I'm risking $100 and I'm risking 4 points, I know that each point is worth what? $5. So that means I know I'm risking $20 per contract. Can't spell. So if I have $100 and I know I'm risking that much per contract, how many contracts do I need? 5 contracts, right? So I have a few Excel sheets you can do to make that, or you can use the position tool in TradingView. And I have a video on that I can link as well. But yeah, I do fixed dollar risk because that's how I do it in here. Versus, let's say on my personal options account, I just have a percentage of my portfolio that I have max into positions, right? So it's a little different between, futures versus options versus stocks, all of that, right? So I adjust it. I'm not worried about flatlining your equity curve. You're just trusting your system. Yeah, exactly. I have enough in the portfolio or in that where I'm not really worried about hitting it. Like I can't take any more trades. So I'm just trusting my system over a longer series of trades. How do you find the fixed dollar amount? Oh, so that kind of depends on if it's personal or funded. For personal, I mean, I can go over how what I do is I just decide how much money I'm willing to risk or lose per trade, what I'm comfortable with, and that's what I risk, right? And I do have to have enough in that account to where, I can comfortably lose, let's say 5-7 times in a row and still be trading, right? I don't want to be like, okay, here's $5,000. I'm going to risk $1,000 each trade because it's like, okay, if you understand margin and all of that, you lose 3 trades. It's like 2-3 trades, 4 trades you can't even risk normally. So understanding that. Now, I also have a video on this for position sizing for futures, but if I'm on a funded account, how would I approach this? The question I have to ask is, how many trades do I want to lose in a row before the account is blown? So, for example, that's the question I would always ask. Now, I want to know, and I'd be say, I'd be fine if I lose 10 trades in a row. I'm fine losing the account because clearly there is something that is wrong with my strategy or something else, and I can use that data to learn. So let's say that answer is 10 trades. All I'm going to do is figure out what is the drawdown. What is the drawdown amount in dollars on that account, right? So we'll use an example. Let's say I have a 25K account with $1,500 in drawdown. Well, then I would answer $1,500, right? Now, if I have $1,500 in the account right? It's a $1,500 account basically. And I want to have 10 trades in a row that I can lose before it is blown. Well, what would give me that amount of dollars, right? It's pretty simple. You take 1,500 divided by 10, which, sorry, I keep pressing T. That's the shortcut in Figma to type. That would be 10 trades, or $150, right? Because if I risk 150 bucks, lose 10 times in a row, that's gone. So then that would be the fixed dollar amount that I would risk, right? Does that make sense? And then let me double check. I missed a few questions up here while you're answering that. Touched on those questions. Can you review EU bullish candle 2? Yeah, let me double check that that made sense for JRM. If it does, then we'll head over to EU. I would create a buffer, yeah. I mean, you can kind of think about it. It's the way I think about it is this way, right? You want to think about the total amount you have into the account, right? So that's why I like my funded futures for most people, because it's not very hidden, right? With Apex, let's say you get the account for 30 bucks or whatever it is, right? Okay, now you have the 120, 140, we'll just use $150 activation fee. You're into that account $180, right? So that's your expense, right? So that means at least on my first payout, I want to cover my expense. So I need at least $180 to cover expense, right? So no matter what, I want to at least get that out of the first payout, because then I'm break even on the account, right? That's how I think about it. So let's say I got to $1,000 in profit, or you have to reach the 2,500. Maybe I leave myself a buffer of 1,000, right? And then I take the risk to cover my expense and pay for my time. So now I have 1,000. Well, then I go back through this process. What's my drawdown on the account? Well, I don't have $1,500 drawdown anymore. I have 1,000. If I want to keep it at 10 trades the same, what do I have to do? 1,000 divided by 10. Now I'm only risking 100, right? So as the account grows or the drawdown grows, then my risk can grow as well. But the way I always think about stuff is I just want to be break even on it, because then whatever happens, I don't care. It didn't cost me money, right? It's the same thing how I manage my options portfolio is once I reach enough profit, I just don't care anymore really, because I know that I could lose a certain amount and I'm still green, right? And then that allows me to take slightly larger risks. But that makes sense. Yep. All right, cool. So let's go take a look at EU to answer someone else's question on a candle 2. I mean, that's not really something I'm interested in. We can go over it, but it just lacks. Remember how I was saying we want to trade swing points at a valid point of interest. So I take a look at this. Yes, we closed back inside the range here after a very shallow sweep. Ideally, I want to trade this at a point of interest. Do we really have one? Not very clear, right? We can say, we're not even going to talk about it, but there's lower time frame imbalance right in here. But if we're going to continue, I would say that is lacking a point of interest, right? But if we were going to trade it, we look, we have the sweep out here. Can put this on, probably do it for us. The only thing is, this setup doesn't validate or form until this candle closes. Let's go back and replay this, right? This setup hasn't formed. Why? We haven't yet had the change in the state of delivery. So until we get that, this isn't valid for me to look for longs, because this low isn't validated yet. Once we do get that, right, why would I not really be interested in it? Well, we're already above previous day high, right? We just swept out previous day high, and we're in a consolidation here. So this is not something that I would consider personally. If I was going to try to, trade this with this bias, I wouldn't really be using the fractal model from the daily to hourly there. I would be more so using the intraday profile and saying, hey, if I'm anticipating price to trade to these highs up here, what am I going to be doing? Well, I would just take a look at our daily open, which I think at Forex is 1700, right? Mark this out. And what do I see as we go into London? We have this consolidation. We sweep out a low. That's a valid point of interest. We have a candle 2 closure there. It's quite messy. We are holding 0.5 of that. Once we close over these down close candles, that is valid for me to look long. And then we're trading this higher, right? So if I wanted to trade something like that, it would have to be something similar to this, right? If I'm executing on the hourly chart, or if I'm going down to the 30 to clean it up a little, but it just honestly makes it more messy for me. So that's kind of the only thing like if you really wanted to try to force something, but I would just stay away from this personally. Yeah, it's pretty seek and destroy looking, right? Like, let's see, because if maybe we'll go over what we went over last week. If dollar is consolidating, we can find moving pairs by finding which currency futures are strong and weak. So I don't know. Let's see, JPY is weak. Let's see if GBP US there. Give me one sec. 6B. That's weak. We don't want that. That's going to be weak as well, but we'll just take a look. No, it's not bad actually. So we could take a look at Euro JPY, and this will have better movement than anything really today, right? So if I was going in with the anticipation of bullishness on this because of weak yen and paired with a stronger euro, I wonder if we can see, let's see. Yeah, that's not even that interesting either. Yeah, so if this was it, right? And I have this anticipation that we're going to trade higher today in this currency future. What do we have? We have a reach lower in London. We form a reversal, and now we are just continuing higher, right? So if I'm going to look to Forex on a day that the dollar is consolidating, right, like this, I'm not going to be interested in any USD pairs. I'm going to be more interested in trying to pair currencies together to find something that is in expansion, which is what I did there because my whole goal is to find something weak so I can go through the currency futures. So I took a look at yen and I see that yen is weak, right? We have a strong downtrend. We could have really used anything, right? And then I take a look at the euro and the pound, so 6E, right? And I see that the euro, we do have that little strong movement up, right? So I could pair that. And if you look at this, euro, and then the pound was weak, right? So really what we could do is do euro GBP. And that's a good one to go if you don't understand pairing currencies and dollars consolidating. This one will have movement, right? And so this one, get the candle 2 closure there, right? And then this is actually pretty textbook. So we will throw the indicator up on that, right? And so you can see, sweeps out, changing the state of delivery. Where do we want to see this respect? 0.5 of the opposing candles there. We open up, we're respecting. We have this move towards the highs. Does that kind of make sense? In terms of dollar consolidations, not looking to pair dollar together. Or like, I don't want to be looking at anything that's crossed with the dollar. So anything that is, I don't want to look at that. So that's why I would say this one's actually the cleanest in terms of the daily formation. And just what happened here, right? We sweep out this low. So if we're trading to this high, right there. Yeah, it's lacking a point of interest, but hopefully that makes sense. If you are confused about pairing currencies, I would check out my live stream from last week because I went over a whole segment on it. So, but yeah, the really impressive thing you can do with pairing currencies is, let's say you anticipate dollar consolidation. So let's say you're anticipating the dollar consolidation, so expansion, you expect this to consolidate. If you expect this to consolidate in here, then exotics will move. So you can anticipate those expansions in the exotic pairs because you're anticipating the dollar consolidation. But if you know like the MMXM trader, you know, people like that, how it seems like they're always watching 100 different pairs. They're like, why would you be watching Euro JPY today? Right? He's not watching a bunch of different pairs. He's just seeing that the dollar is consolidating, then he goes and pairs currency futures together to find the expansion. So my man said Euro GBP is clean. It is clean. It's only clean, like the thing is, people try to see it as a clean pair all the time. It's never gonna be that way, right? It's only gonna be clean or have expansions when the dollar is consolidating. So for instance, today the dollar is consolidating. So we get a nice clean expansion, right? And I would view it as 0.5 of this whip being respected, right? I view it as a strength indicator and an untradeable pair. I mean, I don't personally trade Forex, so I can't even like comment on the spreads or anything like that. But there are times when, you know, if I traded Forex, I would trade this today. That'd be a consideration. Mainly because if we're holding 0.5 of this, so let's think about it this way real quick. I'm actually going to go through something with you. So if we're viewing it as price should respect 0.5 of this, right, as we were trading higher, and I get a reach below that, right, and a nice closure. Once we close over this, I don't expect this low to hold, but if I can anticipate that with a candle 2 closure, right, and we're into here, I could take any entry in here. We'll just do it like that. And then I could have my stop on this low because I'm not anticipating this low to get taken out. Generally, when it reaches back into that mean threshold or 0.5 of the change in state delivery. And then you want to see when it closes over, which is just consolidation. But then once this closes over, now you expect this low to actually hold, right? So as it trades higher, and we made £2. Awesome. Would you even though, see, that's more of a, Forex is not as clean as most futures, I find. So I don't even know. You could do, I'm trying to even think what you use for SMT. I don't even think you use SMT on Euro GBP. But if there's SMT, that's what I look for in here. But the thing is, I wouldn't consider it trading back into the daily OB because there is no OB that is formed here for me. So mechanically, I need a close over here for this to be validated as an order block. Then I'll look to 0.5 of it. Right. So what you're kind of talking about is like anticipated OBs, which I just don't really want to talk about or even ever mention. It's just going to confuse people. Mainly futures are better to trade because you just don't have spread and it's centralized, right? So everyone goes through the same exchange. So you're gonna get the same price as someone else. And they're not ripping that spread off you. And then mainly, especially for people in the States, you can look up this 1256 tax treatment. That will show you. But mainly 60% of your gains gets taxed at long-term rates versus all of my gains getting taxed at short-term rates like it is with my options portfolio, which saves you quite a bit in taxes. So I think that's like one of the main draws to it. I do sometimes wish that I would trade Forex just because I think that I would always be able to find an expansion in Forex, but there's just no real great way to do it. Maybe I start trading currency futures. I'm just not the biggest fan of it. I think I wouldn't go lower than the hourly chart on these. So maybe I consider doing that. Maybe that'll be something for 2025, currency futures hourly chart trading. But you can trade FX and use Oanda. I thought you can't use MT4 legally in the States. But if that's true, I'll fund a personal broker and just rip it, see what happens. Let's see. Did I miss any questions? Initially, I just purged both sides and I thought it was bullish in New York session, but not sure anymore. Oh, NQ going over right now. Sure, we can go take a look. Not very interested in indices right now, but I am bullish. Right, there's no reason for me not to be bullish right here. Right, we have this low forming. We respect in this area forming a wick. Yes, we didn't close over this high on this candle here, but what did we close over? 0.5 of the wick. Right? So then we trade higher. This, if we're going to continue higher once again, can just use 0.5 of the previous candle's range, which would be there to there. Right? We have a move lower. Now, why isn't this ideal to long? Why don't I expect expansion? And I may be wrong because the market has been crazy. How do we trade? Remember what I was talking about in the beginning of this video. If I want to get on side with an expansion, I don't want to see price open, trade higher, then go lower, right? Then go higher, right? I'm not into that. I want to see it open, have it drop lower. So I'm fine with a slow. You know those daily profiles where you have a nice failure swing off Asia, London, we drop in, New York does this. That's one of those where I can anticipate an expansion. I'm not a fan of that, right? So I would have been more interested if we did something like this and then go. But you still could consider this if we do have a candle 2 closure there. We go to the 5-minute. But what do we notice? It's just not very clean. And we get that heaps of volatility in there. Take out both sides of the range. It's just not very interesting. Even if we do expand, it's like, sure, I could be in here somewhere with my stop there. I just don't really trust that. We're just struggling to push over highs. Right? But I'm bullish. So if I was to try to trade something like this today, I'm definitely sitting on a higher time frame. Yeah, that looked crazy. I didn't watch it other than I have a few positions going, or expiring, I should say. You can use MFX or a couple other prop firms to trade FX. Oh, interesting. Maybe I actually will do that. I had no idea. I'm in UK, so I use that. Yeah, I'm not in UK, so I can't really mess with a lot of those. NQ today, could you take a look at the 4-hour time frame with candle 3 expansion, CISD 3 a.m.? Would you expect retracement or would you trade be avoided? Being candle 3 expanded into a point of interest? Would you wait for them? Okay, let's just talk about it. So 4-hour today. The first thing I'm not a huge fan of here is, actually let's talk about it. We have expansion, right? Coming back into the range. So if we're viewing it as a retracement, we want to see a fair value gap support that, or to sweep out a low. We do have a candle 2 closure. Now, why I'm not a huge fan of this 10 a.m. candle is you see this large wick on the upside here. If that wasn't there, this is way more ideal. But if you see how we expanded up and then back down, this is generally less volatile, but still working out. I think your question was about a fast move down here into the point of interest. Yes, I'm not trying to long this candle, right? But giving it this extra candle to sweep out, then have the reversal, I'm not so worried about it expanding lower, right? Now, if this candle would have closed outside the range, then I'm viewing this as a reversal And then, yeah, I'm not trying to long that. Does that make sense? So let's see, 4 hour 15. Was it a little cleaner? Eh. Still just the 930, right? It's just, this candle kind of ruined it. This move higher first for me. But yeah, you could consider trading this candle higher, like I was saying. So it'd be that, that, seeing if it's trading higher. Personally, it's less ideal for me. But yeah, that's a good read. You have it down. When you get a minute, can you touch on using standard deviations to set targets? Yeah, so I don't use standard deviations a ton. They are useful as a confluence. We're going to go back to Euro GBP because that is cleaner here. So where are we? Go to the hour. Even this one's not great. I think Euro JPY might be a better. We're in the Forex game today for examples. Yeah, we'll use something like that. Go to 15 and we'll project out London here. So I am working on the indicator for those of you that have questions to be able to toggle between wicks or the body. I used body at first because it was more mechanical in its process for coding it, but all I'm really focused on is projecting out manipulation, right? So if I view this with a bullish bias, as we have this consolidation, we retrace into this previous range, and most importantly, a sweep out here, a change in the state of delivery during London, right? And I'm anticipating these highs to get taken out. If I'm anticipating this to form the wick, let's do this real quick, right? A little off, interesting, but I'm anticipating the wick to have formed of the daily candle, right? This is just not clean, and I'm trying to project out London for targets. I'm just going to find where we made the manipulation or the low that had the change in the state of delivery. I'm going to grab that low and then go to the left and find the high that made the low. I project that out, and then that will give me targets for this expansion higher, right? Now, I don't want to just generally blindly use these targets. I normally want to either zoom out a little if we're at the higher range, and then look left and pair stuff with it, right? So if I see -4 right here, it's also lined up with this previous high. I could look at that instead of this high because it is over the targets, right? This is a pretty poor example of what I generally wanted to show, but hopefully that makes sense. Where can I find the 8:30, 9:30 opening lesson video? So that will be in, I know I talked about it in a few streams earlier this summer. I don't have the exact ones, but I do have my time video on YouTube that you can take a look at. On NQ, we got 8:30 manipulation and at 10 a.m. manipulation. Does that happen often? Let's go back to NQ. So I like to use the 5-minute or 15 for intraday stuff. Just remove all these. So you're talking about, I don't really view 8:30 as manipulation because it stayed internal to the range. So here's our range high. You could say that's low or there, right? 8:30, I don't consider this manipulation because it never manipulated anything. It just went inside the range. So I don't view that as manipulation. I consider 9:30 a manipulation. If your bias was bearish and you see 9:30 do this, then I'd want to be seeing if 9:30 could close below here, right? Or if it's a little bit messy, zoom out one time frame and see if the 30-minute could close below, right? But not being bearish, right? You would then want to see if 9:45 or 10, right? Which I don't really even, I don't really see 10 as manipulation because 945 manipulated this side of the range. So I guess I'm a little bit confused on the question. But I would say don't focus on, you have to come into something with a higher time frame bias to actually understand how those times make sense, right? Like this makes a lot more sense if I am bearish, right? To see 930 move higher, get a close below, go take out this side of the range. But then once again, if we're going to get a continued expansion and we think phases of price delivery, right? Let's go back to here because this can be a good lesson. If we're expecting price to trade lower, just for an example, I'd want to see a shallow run back into the range or a retracement, right? Or some sort of consolidation, we can then sweep out to go, right? If we have expansion met with expansion, that is what I consider to be a reversal. So when we do that, this is forming a wick on a higher time frame, right? So when I see that, that is where I'm like, maybe short is wrong, right? Right. So then expansion met with expansion, this can be viewed as a retracement to expand higher. This would be, once again, another retracement, fair value gap, right? But it's just messy because of this range. Let me look at your drawing real quick. I'll put it up on the screen. So this is someone's drawing in chat. So yeah, so if you're gonna get a continuation, sweep out the range high, you get that. But when you're met with expansion, this is a reversal. This is, yeah, the actual move. Or, yeah, if your objective's up here, you're not interested in this at all. You're only interested at this low. Or letting this low form, and what does my model do? Hey, we can trade these continuations. Also 830 did not form SMT. Does that make sense, though? It's kind of a confusing day, but it's mostly just whipsaw price action. And yeah, we start to trade over this. But like, even if we expand higher here, it's just rather uninteresting. And unless you're trying to get in long around the lows, because these continuations aren't very nice. Wasn't easy holding to the, yeah, are you long NQ right now? That's quite the hold. Holding through this is not very fun. What normally happens here is you get more of a shallow run. If this is going to consolidate like this, normally gets a shallower run here, starts to trade higher. People think this is going to hold. They then move their stop losses to here. Then you get one swipe to then trade it higher. But because we did get the little reach in the swipe, that's just a sweep of a low on a lower time frame. Then it does hold, but that it's just very sketchy, right? For me, back to phases of price delivery. If you guys just focus on finding expansion met with expansion, it's going to help you a lot. Expansion met with expansion. This is a continuation. And then I just let a low form in here to try to trade off of. But we're going to get off the 1 minute. We don't need any of the crackhead stuff. 2R, but made me very nervous. Well, I will say, well done for just following your plan. It's a lot better to follow your plan and feel your emotions than to let your emotions make decisions for you. That's all you can really ask. So, but we are just about at an hour. If you guys have any other questions, you can go ahead and get those covered. One quick look at something. Cool. I don't think I missed any, but if I did miss one, just re-tag me in it again. Sometimes I do miss some questions. but I'll give it about 2 more minutes for any other questions, and we'll probably hop off. Take a look here. Very, very eventful day here. So, shall we make predictions on when oil is going to get out of this massive consolidation it's been in? It's absolutely hilarious. Happy New Year. Yeah, thank you guys. Hope you guys had a great Christmas. So, we'll be back on the normal schedule of me on Wednesday for next week. Just with Christmas, I took the day off and didn't look at anything for the first time in a minute. So I am gonna try to do nothing on Sundays. So that will be my day off. So just so you guys know, I think I talked about it with a few people, but I'll probably make a little announcement where, because I've realized I don't take any days off. I just am always in here, always working, always doing something. So Sundays are going to be my day where I do nothing and try to relax. So, hope you have a great rest of your guys' day. If you have any questions, just tag me in chat. I will get this stream uploaded here momentarily into the WAP. So,